Special greetings to all viewers and subscribers on the Sports FX channel. Hope you guys are doing fine. Time is 10:43 a.m. the 5th of August 2021. I got a tutorial video for you guys. It's called Trading Gold Using Supply and Demand. Now, made mention of this numerous times earlier on my other channels, but for those who are subscribed over here and are not privy to my other channels, the links to those gonna be in the description box below. Here we go. So let's quickly start off. Now, before I jump in, drawing up a bunch of rectangle blocks and all of that, let's take a look at how the market price first started off for the month of August. And let's take a look at the last piece of crucial moves that were made in the closing period for July. So let's backtrack, look a bit. So the last day in July was on the 30th. So let's take a look. Okay, so what am I gonna do first and foremost? And please note, guys, do not confuse support and resistance with supply and demand. I'm gonna touch deeper on that later on. So right here, 30th. So that's the Friday. That's the highest era that market price made on Friday for the price of gold. Okay, and then right around here would be the low. Excellent. So we got those two easy out the way. So I'm catching the closing period now. So pay close attention to those areas that are marked out. Now I'm gonna go and catch the period. Let's catch the very first day in the month of August. So okay, here we go. That's Monday. And let's just draw up, given that it's NFP week, the area that's gonna, carry us into Friday with the big bad NFP that sadly gonna humble a lot of forex traders. Alright, let's go. So market structure analysis next. You cannot do supply and demand without looking at the market structure. You have ranging structure, linear structure, accumulating structure, and then you have trending structure. The structure will give you a clear understanding of what type of move to expect, and also put you in a much better position to get a break of a crucial supply or a crucial demand level. Now, work with me now. So, gonna do a top part. I'll go squirrely whirly. And then I'm gonna go more fine-tune with it. Yeah, arts and craft right now. Now, take a good look, guys. A lot of accumulation has taken place since the start of August. We got a big break. Then price came crashing back down. Alright, now what happened on Wednesday? Many persons said it was the news. Many persons were saying it was the news that affected it. But guess what? The move started literally before the news came out. And then after US market became fully apparent that it's up and running, the price came crashing back down. You guys need to understand, it is not retail traders that move the market. And the news doesn't move the market in the sense that you guys think. What happens with the news is that the direction that the market price was heading, it's just going to keep going in that direction when the news comes. So the price, to put it, quite simple for you guys, give me a second. Let me just quickly show you this. I'm going to use some little circles. So this is what, Tuesday. All right. The price of the market was already heading up. Traders. Okay, it was already heading up from the previous day's data, and then flash forward, Wednesday came on the scene, and then we got this move. So I know many persons probably not seeing it the way I'm seeing it right about now, because probably your eyes are not up to that level, but there's a subtle hint in the overall pressure or directional move. I'm gonna add the ED channel right about now for this point. I want you guys to see this, that you could actually see our market price upon making a low at this region. Yeah, guys, work with me. Upon making a low at this region at 1806, market price then continued into Wednesday, and then we saw this break. Now, structural wise, there was a zone right here. Now, what era was this on the chart? This was Tuesday's high, right? Now, notice, guys, quickly. Soon got on the supply and demand part, but I have to touch base on this. Notice, guys, quickly our market price just reacted to this region, and we didn't see any price come through again and take out the 1810 low that the market price made, which happened to be the low that was made on Friday, the closing week. Market price obeyed this entire region, and then we got a break. Market price took out Monday's high and kept on shooting all the way up to the top. And that's where many traders, bought on that impulsive move. But where were they buying into? Let me show you quickly. Then we can draw those fancy rectangle boxes. Take a good look, guys. This right here, so, was the, open high and open low of market price, first hour for the session that ended the month of July, Friday. So, to put it quite simple, guys, quickly, yes, you were buying into supply. Yep, just have to do this in the interest of every single subscriber on my channel. So these guys are buying into supply. Now, let's get all the technical lines out the way and let's replace these areas with supply and demand levels. So yeah, I think I did justice right now when I did it that way. So let's get these out the way. And remember, you can even use your technical lines to draw up your supply and demand levels, but bear in mind that there has to be some level of refinement to how you do it. So right here, so, is crucial supply. Not only it is crucial supply, it's right, below the region where the high that the price made for the month of July is at. Now, right down here now, boys and girls, is a crucial demand floor. Why right here says a crucial demand floor? The overall accumulation structure of the asset was found around this region. Now, you have strong supply and weak supply. You have strong demand and weak demand. Some supply zones give you a much greater move due to the location that they're on the chart. And some demand zones give you a far stronger move to the upside due to the location that they're on the chart. So, right here, so, we had price quite naturally trapped between these two regions. So I'm gonna draw up another one. So let me just fix you up just a little bit. You serve your purpose. So and I get you out the way. Now look at this now, guys, quickly. And as I said, don't let anyone confuse you and trick you into thinking that supply and demand, oh, it is support and resistance. It's not. It's actually not. So this is what we're going into now. M15 chart now. So had you done it this way, you'd have gotten a clear, uniform look as to where your market prices are reacting to, where your price zone levels are being trapped. Let's color you red, yeah. Where market price zones are being trapped, and areas where price that was once supply ultimately became demand of sort for the market price that resounded in these moves. Now notice, our price kind of, upon touching Monday's daily high, kind of piercing past it, there was a quick reaction at this level on the chart before continuing up. Those who kept on, buying into this region, ultimately, you were buying not only into last month's previous highs, but a crucial supply area. Look right into it, and then bullish exhaustion kicked in, and as such, market price came down. Now, flash forward to today, current period. I'm going to zoom back in right about now. Still on supply and demand, guys. Look at this right now. Market price came down, right? Oops, using the wrong shape. Let's go freehand. Market price came back down into this area. Then we got the new session opening block right around here. So price began to obey this area that was earlier pierced. And we saw market price. One more test, failure. Second test, failure. Now look at the clear difference. We saw that we're earlier building momentum towards the bullish side, and all of a sudden we saw market price re-enter back into the same zone that earlier gave us a strong break, but now price is struggling. Had you just label this area with just what we call it a weak supply zone, if I can word it so, you would have been in a far better position to realize, hey, earlier I got a strong confirmation to the upside due to the fact that Monday's daily high was taken out. Why is price currently showing me failure to take out this, somewhat weak supply structure? Look now, there was a decrease in bull pressure. Price started to accumulate right back around this region, and then that overall demand structure that was holding up price, pierce past it, went, got liquidity at a low, came back up. Now this area, let's exit off. That was once acting as demand. What has it become right now to the price? Supply. You see that, people? That's how it plays out over and over on the chart. So do not think to yourself that previous areas on the chart that were once demand, once price break past it and price coming back up to that area, it's going to be demand still. No, it's going to act as supply. There is a flip of a coin type of move that takes place in the forex market that traders tend to overlook and not pay close attention to. So overall, what should you be doing to the price of gold right now? You should be shorting your moves, short-terming, not shorting as in selling, but short-terming your moves. You are still stuck within this overall structural zone on the chart. Let's zoom back in. So this is what you're stuck inside of, people, in the first week. You need to see a true structural breakout of this level, especially if the market price is truly going to be going to the bearish side. We have to see previous zones failing to adhere to a bullish move. And as such, once we see a break, so we have an even stronger era of demand down here. Once we see a break of this era, we're going to call this zone daily demand level. Once market price takes out that region, then quite naturally, we're going to be on our way to say, all right, clear evidence has come through via confirmation that market price is failing to make what? Higher highs, and as such, there is an overall decrease in the bullish pressure and a building increase in the what? Bearish pressure. So we're going to be looking for some sell moves. Now, should you be selling into demand? Certainly not. You have to see a break of that demand level, or if it was going up to the top, a break of a supply level and price respects that zone upon the retest, and then that zone becomes the launching pad for price to move off from there. You get me, people? So hope this look a quick, short supply and demand analysis. I had to join local technicals here and there, assisted you guys somewhat into understanding the schematics of how gold price reacts to supply and demand levels. Naturally, there's going to be a ton more videos in this in which I go far more in depth. So stay tuned and stay subscribed. Peace out and God bless you all. Another video coming up shortly.